Hey everyone, welcome to whatever we're gonna make of this stock market open a live stream. It is 5:27 a.m. here. There is no power. There hasn't been power for like 8 hours. Our batteries are dead, so yeah, we're gonna see what we can do to keep the show going anyway. So we're going to stream it in 720p and use whatever batteries left on our computers and our phones and try to bring the stock market open. It's going to be entertaining. So, rip. Anyway, here we go. So, anyway, we're at 10-year Treasury today, 4.1501. We've got that's actually up about 3 basis points from yesterday. Yesterday we were almost down at 4.1 again, which was absolutely wild to see that we dropped all the way to 4.1. Soon we're going to be under 4%. Which is pretty wild to think we're going to be under 4% pretty soon here. I think it's going to come down to those jobs and numbers that we're going to look forward to tomorrow. Tomorrow we'll get job numbers. Today we're actually going to be looking for unemployment claims. So those unemployment claims, we'll be covering those in a couple of minutes here, which reminds me, let me get it pulled up. But anyway, so we'll cover the unemployment claims and really quick. And then the biggest number, of course, will be our if for jobs on Friday, which is 186. We're looking for 180. I believe it was. No, let me fact check that. I think the last one may have been 186, but 1,000 jobs created. So anyway, we'll get a lot of that. Actually, I don't know. Oh yeah, I can. There we go. Okay. All right. Perfect. Well, at least that somewhat functions. But I think by doing that, my connection just dropped a little bit. Sorry about that. That should fix itself there in a moment. But anyway, okay. So jobless claims numbers out in about 50 seconds, and then we should see, at least some adjustment from the market if we get anything even slightly outside of expectations. Mostly because yesterday we started seeing the market go a little soft. A lot of folks think the market went soft yesterday because we have this catalyst of jobs coming up on Friday, tomorrow. But not only do we have this catalyst of jobs coming up on Friday, but we have Jerome Powell next week. We have CPI next year, or next year. We have CPI next week. So there's this expectation that, again, why buy when you have big catalysts coming up? Okay, so let's see here. Okay, we should have our numbers now. Let's find out. We have, okay, an exact match. Initial jobless claims come in at 220,000. The expectation was 220,000. And yeah, I was actually right with my memory. We're looking for 186,000 for the change in non-farm payrolls. That is actually up from the prior release of 150,000. So I'm not sure what to make of that, because if tomorrow morning we meet expectations, what we're doing is we're actually we're going to come in than where we were last time. That I find very interesting. So if we look at the change in non-farm payrolls in the prior report, we had 150,000 jobs, which is roughly below trend. Trend is about 187,000, and that's pre-COVID trend. Post-COVID trend, we're probably slightly over 200,000 still. So seeing that come in at 186 now would actually mean we hit a little bit of an unemployment low last month, or an unemployment high. I guess it would be a jobs low. But anyway, and we're actually sort of rebounding off of the bottom. Now, how does the market react? Because usually the market works off of reactions, off of expectations. If expectations are that we're going to get 186,000, then we could actually have a strong number like 186 that's still on trend, which is good for the sake of the economy, but not potentially suggest we're going into recession. All right, so we'll pay attention to that. Let's take a look at the Atlanta Fed Real Now GDP tracker. I don't believe the next. Oh wait, the next update did come out. That's interesting. I should be able to share the screen here. So let's go ahead and share the screen. Oh yeah, look at that. Thank you, by the way, StreamYard, for enabling me to still stream, despite the fact that we have no power, lights, studio, nothing. I did purposefully drop the quality down to 720p since I'm definitely I'm streaming over whatever internet I have on my phone, which I'm actually very lucky that I have the 4 different internets that I have on my phones because I picked the one that was the fastest. There were a couple were pretty bad. Anyway, 1.3% here is the current estimate for the real now GDP estimate for the US economy. Now, a lot of people get confused when they see the Atlanta Fed. That's just one of the banks, but they are making this estimate for the entire United States. That number has come up from 1.2% on December 1st to 1.3% now on December 6th, which is yesterday. Yesterday, of course, was Lauren and my anniversary, and it was a crazy work day, so we'll have to celebrate on a different day. I was also going to make a HouseHack update video, but I lost my studio. Well, I had power. I just didn't have power long enough. Mm, what a bummer. Oh well. Okay. So that's the Atlanta Fed now. Read. Now we know about jobs. Let's see what else we have. So, yeah, we got some wholesale inventory numbers here. Wholesale inventories coming in month over month at negative 0.2%, and wholesale trade inventories month over month at 1%. What we'll do next is I want to see, I should still be able to get us the bell here. We should still be able to get and jump in to add commentary for CNBC or any kind of CNBC discussion. So that'll just take a moment for me to get that ready. And otherwise, I'm watching the sticks, and it looks like we are getting some positivity out of at least some stocks right now after those weird sell-offs that weird sell-off we got yesterday. If you've been paying attention to Bitcoin, you had an all of a sudden $1,000 drop in Bitcoin. It's almost like you kind of just fell off a cliff there for a moment. That sort of came out of nowhere, it felt like. And we've slightly recovered from there. We went down about 1,000, then popped right back up about $300 or so. So we'll watch what's happening here. You've got, let's see here. It's going over to the sticks here. There we go. The dark mode is not really ideal for what I'm doing right now, because when you use dark mode, your one source of light is actually really nominal. But then again, why do we have to think about being in such a situation? Well, when Gavin Newsom can't keep the lights on and you burn through your battery power, because that's the point of battery power, to keep you bridged for 4 or 5 hours, and then you're out. Oh boy, that's okay. It's okay. We'll be fine. Lauren's like, but what about the babies? And I'm like, I guess they're getting cold milk. It's kind of hard to bottle warm when you don't have power. Anyway, let's see here. Let's take a peek at the stickies. So we're gonna go for window. Here we go. Okay, we can still do it. Boom. Look at that. Okay, so Tesla right now is sitting at 241.60 in the pre-market. That's up about 1%. Now, something that's really interesting for Tesla is you are right there. You are right at that breakout of trend line. This is a big spot, and you don't want to keep going down here on Tesla, because you want to hit that confirmation that we can break out of this trend that we're in. It's somewhat like if you look at, let's go jump out over to end phase over here. You really want to stay above this line right here. Fortunately, right now that line's about $100, so you want to hold above that downtrend for end phase. Very important. S&P 500. Look at that. It certainly has surpassed its winter, and it's winter. Sorry, winter. It's a summer high, and we are close, but not quite ready to break that 100 Fibonacci, the 100% Fibonacci retracement line. Not quite ready for that. So we'll watch that. Let's see. Oh, that's very interesting. Don't have as many that we're tracking over here. Wow, is that true? Is Google actually up 3% in the pre-market here? That's pretty impressive if it is. It might be. Let me pull Alphabet stock here. They should have stuck with the name Google, but whatever. Another thing that sucks is you can't make coffee when the power's off. Oh. Okay, so Alphabet. It's like you go downstairs and you turn the coffee machine on and then you don't hear a sound and you're like, what's going on? And then you realize, oh, right, no coffee. All right, so, it's just the Gemini launch. That's it. Google's Gemini. Google's Gemini launch represents significant innovation in AI race. That's per JPM at least. JPM is arguing the long-awaited Gemini launch for Google, which is an LLM, large language model, which was released yesterday. JP Morgan believes it has, quote, significant innovation for Google and entrenches itself in the generative artificial intelligence race. That's very interesting. Let's see here. Doug Anduth reiterated his overweight rating of $150 for Google. The different sizes allow Gemini to be efficiently used across different use cases and hardware capabilities, from data centers to mobile devices, which should enable better cost management. Basically, a way of saying what level of power do you want, which would almost be similar to like GPT. Are you going to use 3.5? Are you going to use 4.0? And maybe say like a 4.5. So Google's Gemini really pushing Google stock here. Let's see if we can get a couple screenshots here. Or if I can get... let's just look a little bit more around here. What do we got here? Oh, yeah, here it is. Okay, these were I was looking for the three sizes. So you have Gemini Ultra. That's almost a play of Apple right there, respect to Apple. Gemini Pro and Gemini Nano for specific tasks and mobile devices. Google also talking about integrating these AI directly into app development for Android developers. That sounds like the perfect way to really harvest your data. Okay, that's the jaded outlook, but I guess you can't really blame it. Yeah, okay, so then we've got, let's see here, what else? Okay, so KKR is shrugging off fear in the market to buy up risky debt. KKR was actually buying a lot of a firm's debt, and so I wonder if that's what they're referring to. KKR is looking past the angst in public and private credit markets for a chance to snap up high-yielding debt and strike favorable deals this year. As the private investment giant sees it, fear in the market about a wave of defaults and breakdown in the private lender sector is overblown, even as weakness mounts. KKR actually dumped a lot of their real estate that they bought in 2021. They owned a few thousand single families. They started dumping it. I was thinking to myself, I like when fund managers dump because it means inventory is going up, and then I can get better deals. But on the flip side, not that many fund managers are actually dumping. I'm a big fan of holding real estate long term. I'm not the biggest fan though of conflicts. Like it's tough to have your own real estate when you're running a real estate company. So there are definitely some challenges there. So well, like quick little side note on that. I'm actually getting HouseHack licensed as a real estate broker because I don't want people to think like, oh, I'm harvesting commissions. I haven't gotten a single dollar of commissions from deals HouseHack has done. And I think that's how it should be. Like HouseHack should earn its own commissions. So I'm like, well, I could just license HouseHack as a corporation. And so we're doing that. Continuing claims show that not all labor data is deteriorating. While initial claims came in bang in line with expectations, continuing claims unexpectedly dropped back to 1861. That's 1.861 million, well below forecasts. I actually did not cover that part. Let me grab that really quick. I want to see that. Because I remember they popped last month, wasn't it? Yeah. In the prior month, we had 1.927 million continuing claims. We were expecting 1.910, and it actually fell to 1861. Wow. That's great. That's really good. Yeah. Huh. I like how uh Suresh is like power outage says there's no power outage in Ventura. You realize how like moronic SoCal Edison is? Like, first of all, you have to put in specific addresses. There are like 4,300 people without power right now. I happen to be one of those lucky few. So out of a population of 110,000, yeah, you're talking about like 5% of the city that's without power. I just happen to be one of those. Which is weird because we're in like a 2008 development. So usually you don't have that kind of issue in the newer neighborhoods. Maybe somebody dug and screwed up a line. But what was hilarious is they sent this email and they're like, they have these like statuses like the Domino's pizza tracker. And they're like, we don't yet know what's going on. And we don't even have anyone assigned to it. And they're like, but the power will be back on in an hour. And I'm looking at it and I'm like, you're so full of crap. Yeah, it's a no bueno. So we'll see what happens. Anyway, continuing claims, that is interesting. Continuing claims fell. Yields edge higher after continuing claims miss. That's interesting. It's almost like the market is so uncertain with its bet of bringing those yields in or bringing the lower as inflation comes down. Oh well. Oops. A little bit connectivity, it looks like. This is not good. I don't want to lag. Wow. Okay, yeah, there we go back. Okay, perfect. So, well, not much. I mean, we were at 3 basis points up, uh, you know, and now we're up at 3.8. So it's not like the bond market moved that much. Okay. Then we have gold still at 1251, crypto 43,250. So we lost about 800 bucks there off peak off of BTC. If you have not yet marked your calendar, poverty stream, that's funny. If you have not yet marked your calendar for January 16th, I highly encourage you to do that because that's the day we could get a preliminary read from the judge in the SEC Coinbase case, and then oral arguments are being heard the next day. So that'll be really interesting. Ethereum is still up 9.8% on the week. Bitcoin's still up 14% on the week. You got Cardano up 16% on the week. It's incredible. Polkadot up 15%. Shiba Inu up 16%. Bitcoin Cash up 4.9. Wow, really incredible. Okay. Justin here says Bitcoin is very different from the rest of the crypto world. I think it's very interesting. I don't really agree with you. I mean, I know that uh, your fundamental style of mining versus stake is different, but eventually that'll change as we rely less and less and less and less on mining BTC. But really, what you're doing is you're creating blockchain-based technology that, of course, there are a lot of people who are worried about like quantum computing hacking your hashes for and your private keys for crypto. But I personally, I'm not so worried about that, mostly because I think we can just update our private keys to a quantum private key, probably before you get hackers using quantum computers. But the underlying thesis of using blockchain, I think, is fantastic, and very very useful. I think let me see if I can adjust this. Oops. I actually think it'll help us get to like T0 with settlement services for stocks, which I'm very excited for. Like instantaneous block. Well, that was inevitable, but anyway, we'll keep trying. So anyway, I think I finished my thought mostly there on BTC and crypto. I'm a big fan. I actually I'm not the biggest fan on pure speculation on prices. I'm a big fan of the underlying technology, and so the underlying technology will become pretty critical. So I know a lot of people are very anti, like the Fed and banks working on crypto technology or blockchain technology. I actually think it's so great. It's so evidencing that there's real potential power there, unlike what we have here, which is a real potential lack of power. That's all right. I realized one of the reasons I burned my battery is because I have my studio air condition hooked up to it, so I may have sort of blown through my battery power. But then again, in like the 8 years that I've had this whole house battery, or part house battery, however you want to call it, uh, I've never had the power off for 8 hours. So what are you gonna do, I guess? Anyway, would love to hear your take on the Polkadot's OpenGov. Hmm. Well, I always get skeptical when there's this suggestion that, oh, we've truly fully transitioned away from voting control. I will look into it. I'm gonna write it down so that way I have it, and then I'll look into it. I probably won't do that. Well, we're not gonna do that right now live, but I will look into that. So OpenGov, and then maybe we'll make a video on it. Okay, so let's see what else we got here. Wall Street puts a sell on its China holdings. Now that's interesting because Kenny G over at Citadel is doing everything he can to buy more shares of Chinese stocks. So let's see here. Of Washington's biggest China critics, or one of Washington's biggest China critics traveled to New York in mid-September to meet with one of Wall Street's best financiers. His mission was to persuade them to stop investing in China. Wow, Kenny G's Ken Griffin. Wisconsin Republican Mike Gallagher, who chairs the House Committee on China, was surprised to find they didn't need much coaxing. They told him they were already ratcheting back their investments in China. Net portfolio investment flows to Chinese stocks and bonds. Negative $31 billion in 2023. What do you think's going to happen first? Buy the dip on China or buy the dip on San Francisco? I was really curious about that, and I want to run a poll on that just to see what y'all think about that. And potential buy the dip. Like, what happens first? That's what we're going to do. We're going to call it that. Okay, one sec. Here we go. Okay, so what occurs first? And we'll get sort of a public survey here. Run poll. What happens first? Buy the dip on China or San Francisco? Buy San Francisco, buy China. I have a feeling I know which way this is going to go. Yeah, Mike. That's exactly what I was expecting people to say. Anyway, all right. So, okay. Okay. So let me see if while that poll runs, can we actually pull up CNBC? That would be very nice. So we can add some commentary here. And then, of course, we'll get into some research as well, which that I know I can do. Oh, Elizabeth Warren's live. Okay, hold on. I want to hear this. So let me use... Oh, I don't know that my internet connection's going to be strong enough for this. I actually think it's going to be a bad idea to do that. I know I can do it, but I think it's a bad idea. Yeah, let's not do that. Okay. Well, Elizabeth Warren's live over there. So let me do this. I can get a feed of what she's saying. Let's find out. Or do we even care? No. Must not be a lot of news coming through yet. All right, fine then. Very well. Let's go look at what the suits are saying this morning as we pull up some of the research and the bookmarks I wanted to look at here for some of the other things we've already gone through. But looking at the suits here, can the Bank of Japan hike if others are cutting? Ooh, well, remember the Bank of Japan is trying to create inflation, and now they've started creating inflation. So the wonder is, at what point do they hike rates even more to constrain some of the inflation that they're creating? Let's see. Cheap small caps get staying power as stock gains broaden. Small caps have continued their gains in December as the rally in everything faces the reality that rate cut bets may be too aggressive. The NASDAQ to 100 price ratio just hit its lowest ever, but since mid November, the small cap gauge is up almost 3% compared to slightly negative for the NASDAQ. Slight reversal there. Wow. Okay, now I'm going to go look to see what Wall Street's saying. Let's see if I can get the Wall Street commentary. I believe I can by going over here. Yeah, everything's a little slower when you're not in a studio with a switchboard, but that's okay. So, who do we want to listen to first? Today is December 7th. I can't believe the year is like 24 days from over. Christmas is in what, 2.5 weeks? Oh, that's just wild. All right, let's go Sock Gen today. People demanded I say Sock Gen, so there you go. A little bit of currency talk. The dollar has had a big rally. The yen has suffered a big fall, and China's disappointing economic performance has scared investors away. Okay, so much bad news in the price. It's worth looking at Far Eastern currencies again. The buying currency in general, I'm not a big fan of. I like assets, real assets, stocks, real estate. Let's look at Morgan Stanley's morning note. So Morgan Stanley's morning note US CPI fixings full amid plunge in crude and commodity weakness. So in other words, suggesting that expectations for CPI are being revision down or revised down. Which reminds me, what are expectations for inflation? Let's look at that. Ooh. So even though we're looking at 186 for jobs on Friday, tomorrow morning, which we'll cover, hopefully then we have power, we are looking at CPI month over month of 0.1% and CPI core of 0.3%. CPI year over year expectation is 3.1 and year over year core is 4. I'd love to just get matches even with a slight miss on CPI core because that would bring us into 3.9 year over year. That looks a lot better. And I'm not convinced that 0.3 is really the best though. Probably want to be closer to 0.2. 0.3 really annualizes out to about 3.6%. So less ideal there. Okay. Let's grab the latest from Nick T. All right, Nikki T. Nikki T suggests Janet Yellen with a little bit of shade. Economists who said that it's going to require very high unemployment to get this done are eating their words. Oh, Janet. More signs in labor cooling. All right, let me present this page here. Let's go. There we go. Look at that. We got to thank StreamYard for still being able to stream here. They're a paid promoter of the channel. You can check them out by going to StreamYard. We'll ideally go to metkevin.com/StreamYard just so they're like, okay, Kevin does send us business. I think they're great. Like everybody should be streaming with them and using. I even use them and from the point of view of like, I think they're better than Zoom. Anybody who uses Zoom should use StreamYard. But anyway, so Janet Yellen with a bit of shade. Okay, so we saw that. Here's the part that I wanted to show. More signs of cooling in labor demand. The number of job openings fell in October to 8.7 million, the lowest since the reopening of the U.S. economy in Q1. That's the drop in the JOLTS, and I'd like to see that from Nick T's chart. Yeah, here it is. Here's the 3-month moving average. So you can see we've had volatility here, but a good trend down. That's very good. And then here we have the ratio of job openings to unemployed, right? This is the number that Jerome Powell at one point suggested he would want to be around 1. It sounds like he's settled with the idea of being okay that it could be higher. What is interesting is you'll notice during the bull time of like 2016 to 2019, you actually had about 1.25 jobs per job opening, and we're somewhat trending back to those levels. Should still be okay there. There we go. All right. Very good. Let's see what else. So next up, let's keep going with the suits here. So that was SocGen. Got the CPI expectations. Let's now go into, where is it? Here it is. Okay. Take a look at, let's see if Bank of America has a piece today. It's been a minute since we've covered B of A. And there's a good one over there, a good analyst. I mean, there are a lot of good analysts at a lot of these different companies, but Hartnett, he's a bear, but I always like reading his stuff. Bank of America. US, watch the right dots plot. No, it's not Hartnett today. But okay, so what do we have here? Dot disconnect. The market is repricing Fed cuts. in such a way that would be consistent with 100 basis points lower in the 2024 dot plot. They're basically saying the Fed's projection is way different from the markets right now. Maybe the Fed should consider hawking a little bit to try to get those into alignment. Okay, I'll keep looking here. By the way, the 10-year Treasury, it's up 2.7, which is like a whole basis point less than where they were after the numbers, continuing claims came out. Better than expected. But anyway, back to this Bank of America piece. The front end is expecting less of a interest rate drop. The spread between market pricing and the 1 year is pretty substantial. I'll grab a screenshot of this. It's an interesting chart. Trying to understand the spread between what the market thinks and what the Fed thinks. So let me explain this chart. Here it is. So what you have here is when the line is negative, it means the market thinks the Fed is actually going to have lower rates than the Fed thinks rates should be. And you could see we felt this way. We almost felt this sort of euphoric about Fed rate cuts back during the banking crisis. But we hadn't really gotten on this path of disinflation yet, which is what we're on now. But that is interesting to see that disconnect is very similar to the banking crisis, which then, of course, Powell had to do some hawking. Evan, you missed the discussion. I do have a power wall. My battery died. I already explained that. So I got like 30 solar panels and a battery. I already burned through it. My AC hooked up to it from my office. Oops. Oh well. So 2024 and 2026 gaps stand out. Let's see. Okay, that's for pricing. That's fine. That's a little boring. Now it's a little bit of a boring Dropbox. Let's try Goldman Sachs. So we got on Goldman today. So Goldman, ooh, hammered. Let's see what his updated opinion is. Where is it? U.S. equity views. Stand by. Stand by for the opening bell. And this piece that I'm trying to open up. It's not working. Okay. We'll find then. Oh. Alright. We'll skip him. Alright. Let's see here. Here are... Oh, I like these sort of lists. Maybe we could do these more often. 10 things you shouldn't miss this morning. Moody's Investor Service advised staff in China to work from home ahead of its cut to the outlook for the country's sovereign credit rating, a suggestion that staff was believed concern over potential protests is possible over this downgrade. Interesting. The amount of money that institutional investors have in Chinese stocks and bonds has declined by more than $31 billion this year. We covered that a little bit earlier by the Wall Street Journal. Bets on the BOJ rate hike have surged, 45% chance, shift in policy month or policy stance. Oh, that would be fighting the inflation they caused. Finally, Japan got it up. People have been waiting. Hey, when's inflation actually gonna hit Japan? Now it has. European Union is nearing a deal on what is poised to be a comprehensive regulation of artificial intelligence. Yeah, we'll see what that does. OpenAI's new board has a new board, but its directors may still confuse the same old problem. Well, yeah, that's true. I mean, it's like, what do they say? You cut off one of the heads of the sea monster or whatever. It just And just grow another one back. Okay. What else? Let's go see what Barron's is complaining about today. All right. The EV bubble has popped. There's no denying the data. That's a Barron's piece today. Okay, let's share that screen. You can see it as well. Investors and car companies are trying to figure out what's next for EVs, blah, blah, blah. Peak, they're just looking at peak market cap of all these companies. Oh, who cares? That's a stupid chart because a lot of these companies just couldn't mass produce. That's silly. I disagree with basically the whole article now because what they're doing is they're saying that, they're sort of implying that people aren't buying electric vehicles. But really what they're just doing is they're saying the overvalued SPACs have lost a lot of their value. So that's a little nonsensical that they would do that. Not a big fan, Barron's. Not a big fan. Diesel made from animal stock is booming. Why do I feel like I'm in, or animal fat, yeah. Why do I feel like I'm in Rust? Let's get some animal fat and make some low-grade fuel. Get some cloth. Hemp. All right. Silliness. All right, let's go see what the stock market's doing. And then we'll look at a little bit more institutional calm and add some more perspective. If you haven't yet seen, by the way, my reaction to the Republican debate, I encourage you to watch it. We talked about it on the podcast quite a bit yesterday. Okay, so what do we have here? Go away, you start exploring. There we go. Google up 4% in the pre-market following a 0.79% drop yesterday, or 7.3 basis point drop yesterday. You've got Amazon positive about 1%, Tesla about up 1, Enphase about up only 0.23. But let's look at the Qs. Qs, ooh, a little bit of a rally there into the AM. Here's when continuing claims came out here. Kind of created a little bit of a near-term bottom there, a local bottom, and it's been up since there. Let's see how the market opens. Yesterday we were up and we sold off the entire day. That was wild. When the sun comes up, will solar be enough to run your house? Well, hopefully. When the sun comes up. The sun is not up. I suspect it'll charge our battery back up. How's that oil 110 coming along? No kidding, right? No kidding. So many people were demanding and predicting that oil was going to break $110. It was all bull crap. And we called that too. I mean, and I don't even think that's a hard call. Like, I don't even feel impressed about calling that oil wasn't going to go to 100 again. Like, that was just a duh. Of course, then you get the price targets of it's going to 150. Yeah, it's because you get those call options, huh? Those weeklies. All right. So, next. Let's see what's inside. So we looked at Morgan Stanley, Bank of America. How about, do we have a TS Lombard piece from yesterday, maybe? One sec. Oh, yeah, we do. TS Lombard. Fed optimism versus European defeatism. The Fed wants to take the win on plunging inflation and cement this soft landing, but European policymakers are gripped by sudden pessimism and policy defeatism. Yeah. The Fed is 75% of its way to a soft landing. Wow. And they're suggesting inflation's basically over. Wow. Actually, it even looks that way for Europe and Japan, UK. I'll show this chart. Give me one sec. Inflation gap. Ooh, both these charts are useful. Stand by for the chart. Okay, present, share screen, window, chart, boom. Look at that. This is the annualized monthly core. So you're only smoothing out to 2 months. And I mean, you can clearly see in the chart Europe here. Europe's basically at 0. The United States is bobbing around slightly above in like that 2.4 range, along with the United Kingdom. UK buddies over there. The Fed is 75% of the way there. Progress towards the Fed's soft landing. Yep, you can see a nice decline over here in the, what do we have here? This is the gap between labor demand and job openings and the total workforce. Progress towards the Fed's, hold on a sec. And then we have annualized 3, okay. Hold on, let me try to understand this. So blue is the inflation gap. Oh, I see. They're measuring the gap from goal from 2%, right? And then they're measuring the gap between JOLTS. You know, if you have 1.6 jobs openings for every unemployed person at 1, then the gap is 0.6, right? So you measure that. Both of these are converging to alignment, almost. Very interesting. It's an interesting way to put it. Okay. If you want to insult someone in British style, just insert "you absolute" in front of any noun. You absolute dog shit. I'm cracking myself up even with bad grammar. Okay, so you absolute. That's interesting. And somebody here says, I would love to do geothermal in new construction one day. You know, they're doing that in Germany right now. A lot of Germany. A lot of geothermal in Germany. And there are government subsidies for it, or there have been. I think they just ended them. And the break even's pretty good. Oh, wow. Whoa. Whoa, whoa, whoa. I got to look at this poll. I'm actually blown away by this poll. What happens first, buy the dip in China or buy the dip in San Francisco? 52% said buy the dip in San Francisco. See, I wouldn't. Okay. Well, now I'm interested. Is anyone interested in the dips? I'm curious. Now let me see if people would put their money where their mouth is. Okay, I'm running a new poll. And I'm writing, is anyone interested in a buy the dip San Francisco estate? That's we'll see. Of course, like right when I want to run a poll, the connection goes. Ugh. All right. So, let's see here. NASDAQ is still rising into the open. That's great. NVIDIA up 0.45 even after the AMD chip announcement yesterday. That AMD is announcing that they have basically a nice rival to AMD's or to NVIDIA's H100. AMD is up 2.95%. Let me get the details on that chip. Oh yeah. Okay. So it is called the MI 300X, and it is known as AMD's most advanced AI accelerator. In a market it predicts will reach 400 billion by 2027. You see, some of these estimates are very high. Which market do they think is going to be $400 billion? Their chip or the entire accelerator market? Yeah, it's the entire market. Oh, okay. 400 billion. Yeah, that's not too far off. I believe Nvidia will be responsible for about 100 million or 100 billion rather. That would put them at about 25%. It's probably a long-term trajectory anyway, which is really good for Nvidia, I think. Anyway, okay. Chip designer AMD has launched the sale of its product called the MI300X. NVIDIA's H100, which Sue used as a point of comparison throughout our presentation, has dominated the market. Well, now you got to make a bunch of them. That's the problem. You got to make them. AMD expects the MI300 chips to be its fastest product to hit 1 billion in sales ever. I believe that. I think people are clamoring to get their hands on these AI chips. Okay. AMD's efforts to go head and head with NVIDIA by yeah, okay, they're coming out with a software platform, Rock M6, Rock'em 6 software dev platform, which would hopefully compete with NVIDIA's proprietary CUDA. Software is actually what drives adoption, says Lisa Sue. Yeah, I don't disagree with that. We think AMD could get a nice piece of that $400 billion. I mean, I have exposure to AMD too. Oh yeah, I'm not gonna, well, yeah, okay, that'd be fine. All right. Let's see here. Let's go pull the 5-year break evens. 5-year break. Oh yeah, it's harder to not be tired without coffee, or ooh, the 5-year break. Ooh, I want to cover that. And it's so dark, it just makes you want to go to sleep. Oh, work to do. The struggle is real. Okay, let's see. Okay, look at this 5-year break-even chart. I'm going to pull this up on screen in just a moment here. Window, open. Here we go. Look at this. Look at that 5-year break-even, folks. Look at that. It is officially lower than it has been over the entire last 12 months. We finally broke lower than this. Pretty incredible. That is the market's expectation of inflation over the next 5 years. Absolutely plumbing. Streaming from your bunker. We don't have bunkers. Or do we? All right. Oh boy. Okay. Let's see what the Financial Times is yapping about this morning. Financial Times. That's going to be a big deal tomorrow. I'll cover that live. Hopefully we'll have power. I expect we will. Yeah, there's actually very little in the way of really big new changes. Okay. So how about, let me jump over here. Let's go for another Wall Street piece, shall we? Let's go with a suit. We'll go with Morgan Stanley. Oh, well, they have a whole piece on the Grand Theft Auto 6 trailer being a blockbuster and what this could mean for Take-Two Interactive. Let's see what Barclays has to say. Ooh, let's see what small caps they like right now. SL Green Realty. That's it? I don't know, they got a few here. Okay. SLG Investor Day highlighted improving leasing demand. Actually, I'm noticing that a little bit in residential. You're getting residential starting to see a little bit of an uptick in the quality and the quantity of tenants. Okay, Barclays, that's boring. We need more news. It's not enough news. Let's see what Goldman has to say. Not too much, actually. Wow, quiet market or quiet morning. Maybe we'll take it. We've got about 6 minutes to the bell here. Continued fighting over in Israel. It's kind of sad that the truths had truths. Yeah, there we go. Had to end. Just hurts so many poor and innocent people. And when I say poor, I really mean it. I think the per capita income's $4,000 a year over in the Gaza Strip. It's tough. We're like 10 to 12x that out here. Per capita includes children. GameStop, yeah, smart. Doesn't surprise me at all. Look at this. Hold on. I'm gonna share this window. Let's kill the break even. Let's add this. This does not surprise me. Oh, oops. Clicked the wrong. Oh, wait, here. GameStop sank after investors reacted to results issued late Wednesday. Among other stocks active. Well, they issued shares, I'm pretty sure. Net sales were down from a year ago. Net loss was less than a year ago. That's good. Feeding through that inventory, though. But at some point, you have to replenish that. And they also allowed it to buy equities and make other objectives. Oh, that's interesting. Why would GameStop buy equities? You buy more than 40% in a company, you become an investment company. And then you're like, oh, hello, regulation. Please come on in with your long stick. Stocks can really... What is it? Hold on. Oh, this is a blog. Okay. Claims data boosts soft landing narrative that stocks can continue to rally. Uh-huh. I think the bigger catalyst will be tomorrow. Whatever we rally today could easily be unwound by a bad jobs report tomorrow. Or a too hot one, right? Very, very quickly. But if you missed the low side, Treasury yields might plummet. Actually, I mean, I expect that they would. I think if you got like 50,000 jobs, which I don't think you would see 3.5% 10-year Treasury rates almost instantaneously. 3 minutes to the bell. Frustrated homebuyers are about to catch a break. What's the break they're talking about? Homebuyers have suffered some severe whiplash in recent months. Mortgage rates hit 8%, but rates are coming down. Really? You have to write a whole article on rates are about to come down? And inventory is up 6% year over year. Oh, well, that's cool. A little bit of an inflection up there on inventory. Most of the sales that I'm seeing right now are trust sales and probate. Sean says Kevin refuses to buy a gas generator. No, actually, I'm not opposed to gas generator. I'm not allowed to have a gas generator here. I'm in an HOA. There's no way in hell I'd be able to get away with a gas generator on how tiny of lots we have. Can't do that. I'd be waking up the whole neighborhood right now. So that won't work. Okay, 2 minutes. Here we go. Oh, Kathy Wood, by the way. Very interesting. She added both Palantir and Trade Desk, or added shares yesterday. Both two of my faves. And then she trimmed UiPath and Coinbase. Straight chillax and my AC was probably a little more efficient than that. It's a mini split. So let me see the wattage on those. It's one of those Mitsubishi ones. Oh, yeah, you're right. You can still pull thousands of watts. Okay, never mind. Why is the power out? Gavin Newsom. Didn't Kathy Wood sell Palantir at 12? She's back, okay. Sean, I have no lot. I have no space. There's no space. It'd be like right under people's bedrooms, sandwiched over here. And I refuse to move. All right. Let's take a look at how the bell moves the market here. Share screen. Oh, yeah. And then McKay wants even more emails, even though he's behind on emails right now with all the emails we got from yesterday. I think. I'll have to check. McKay wants more emails, so if you want to bundle up, email us at staff@meetkevin.com. I'll give him a hand as well. He did a great job last night, so thank you, McKay. But here we go. We're 20 seconds away from the bell. I'll be your bell today. Again, that's staff@meetkevin.com. You could learn about options to bundle up with the shadowing experience, all of the OG courses, the gold course, which is most popular right now. New lectures as well. All right, here we go. Ding, 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 ding. Yay. The market's open. Kevin was the bell. All right. Red candle trying to form there on Tesla. End phase, red candle. It's all going to get sold. With jobs tomorrow, why would you buy today? I don't know. You never know. Yeah. Red candle here. Red candle on the Qs. Green candle on AMD. AMD's trying to push it, buy the dip. Google, slightly red, but still up 4%. Amazon, Apple rising, up 82 basis points. Tesla trying to create a green candle now, up about 1.18. Open doors down at 3.4. End phase, AMD. All right, some of that initial morning volatility. Google driven AI they announced yesterday. I want to see how they turn that into profit. Oh, there you go. Yeah, there you go. It is actually pumping. Unlike Tesla. Oh, that volatility. Oh. Hmm. Yeah, Kevin covering the opening bell is like watching a horse race. I mean, I find it entertaining. The first trades of the day, I always feel like it's like the bearish suits, and then it takes a while to stabilize. But we'll see, and we'll watch this. Ooh, look at Apple! Holy smokes! Apple's just going straight up. Apple's going straight up. Google's going straight up. All of the Nasdaq basically wanting to go straight up here. Wow. Amazon straight up. Nvidia's up. Let's go AMD. Yeah, AMD is up about 3.5, but also a little more volatile. Wow. Okay. What I'm gonna do is I'm going to let's see if we can delay the course live a little bit. So because if I try to pull up documents at 720p and we do a fundamental analysis, it's gonna be a little harder to see. So with that, we're going to do a little delay on the course live until I get power again. We will, let's wrap this up here. Let me read this off. Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is neither personalized financial advice or no real estate advice for you. You already know about this. It's not tax, legal advice, third-party content like StreamYard is a paid promotion. We can benefit from it. Other third-party content we showed shall not be reasonably sufficient information for the purposes of evaluating security. And I personally operate an actively managed ETF and hold long positions in various securities, including those mentioned in this video, and I have no relationship to any issuers other than HouseHack. Let's quickly look at the poll that we ran, because we did run a poll. I want to cover that, and we're going to cut this a tiny little short here, only about 10 minutes short on the open live. I'll be back tomorrow, hopefully with power. My goal is to be live every single day at 5:25, no matter what happens. I want to see what that poll result is. Okay, 69% of you said you would not invest in a San Francisco only buy the dip fund, whereas 31% of you said you would. And that is out of 536 votes. That's very interesting. That is very interesting. Put some thought into that. Okay. Anyway, quick final look here. Yeah, look at that. Tesla's basically given up all of its gains. It's going negative. Whereas Nvidia's off to the races, and so is Apple. And so is Google. So is everybody but Tesla. So we'll see how it evolves. Anyway, okay, I'm going to go. Thank you so much for being here, folks. Love y'all. See you next one. Goodbye.